Hey everyone, welcome to Bald Guy Money. In last week's video, I touched a little bit on silver supply and I gave you all my 2026 price target for silver, which, if we look at how the market is developing right now, I think is extremely realistic, but we're going to touch on that a little bit later. But in the spirit of creating a dialogue with my viewers and responding to your comments, because I read them all, so you can be rest assured that if you leave a comment in this video, I will read it. I may just respond to it. And I want to cover the topic of silver price manipulation in this video because it seems that Bel Air Babe, who said manipulation of silver and the S&P 500 is well known, specifically silver paper. So I assume she means the use of paper derivatives market, which I agree with totally, by the way. And then she gives us a mic drop saying, analyst is wrong. And that's okay. I welcome these kinds of comments because it gives me an opportunity to set things straight, because Bel Air Babe, who I assume came to the video from the Road to Ruta channel, and I welcome all Road to Ruta viewers here, she might be under the false impression when it comes to my position on the price suppression of silver. So in this video, I intend to set the record straight, always using facts and figures to support everything I say, to tell you exactly how the silver market is manipulated, and it is indeed manipulated. I will also share with you all a price range that I think silver could hit conservatively, as well as a second more optimistic price range, let's call it a more aggressive price range, silver could hit considering a more extreme manipulation scenario. And I'll wrap it up by comparing those numbers to my 2026 price target with a little commentary on why I am still buying silver today after more than 15 years of stacking, and why I think now is really one of the best times to be buying silver. But just before we get into it, I want to remind you all that if you're in the USA and you want to stack at arguably the best price from a reputable dealer online, check out channel partner Pimbex. You have absolutely nothing to lose by going to their website and checking out what they have and at what prices they're selling at. And if you're like me and are looking to stack high quality, recognizable silver that you'll be able to easily liquidate in an emergency, check out these Philharmonic coins they're selling. I have been talking about them for a while, and I bought some recently for myself. I showed it to you in a video a couple weeks ago. Call me boring, but I stack for value, and this here is a real value. It's a real deal. I will leave the link to this deal in the description of the video if you're interested, and that's pimbex.com. You can reach them at the number on the screen. Just please let them know you came from the Bald Guy Money channel. Now, let's get into it because manipulation of the price of silver is absolutely real, and I have been saying for some time now that the day is coming when the rubber is going to meet the road and the price of silver is going to have to align itself with the realities of the physical silver market, meaning that it's going to have to respond to supply and demand of the actual metal itself. So to start our journey, I am going to quickly explain what the paper market for silver is, and then I am going to show you exactly how the price can be manipulated, specifically in the downward direction. And I have created this image for you all as a kickoff to the journey so you can visualize just what we're talking about here, because by most reasonable estimates, the paper market for silver is about 250 to 500 times larger than the physical silver market. And what's happening on that market, all of which is settled in the weakening US dollar, has a major influence on how much all this metal I have on my desk can be bought for, sold for, and traded for. Now, when looking at the silver market, there are 5 pillars we need to consider. They include futures contracts, options contracts, over-the-counter or OTC contracts, silver ETFs, and finally the physical silver, which includes bullion, like the kind that I own and I think other people should focus on too. And although I could talk all day about these different markets, how they differ, simply put, the first 4 are all settled with you in paper, with ETFs at least claiming they have physical metal to back up the paper obligation. Whereas the first three on the list don't even have that. They are purely pieces of paper. They are created out of thin air, never settled in the physical metal, and are responsible for documented cases of price manipulation, with many documented cases being deliberate, but with some element of it being inadvertent consequences of greed. And I'm going to explain what I mean in a moment. But in a nutshell, what I want to say is that futures contracts and options contracts and even OTC contracts can be used to create false impressions of supply and demand on the market, most famously through something that's called naked shorting. And that happens mainly in the options market, where people sell paper contracts for things they don't actually own. Think of it like this. We live in the same city, and I advertise a 2019 Ford Taurus that I don't have for $18,000. You call me up and agree to come to my house next week and buy it, since that's the going price for the car and you really want it. In the meantime, I flood the market with more offers for the same Ford Taurus that I don't have, but I offer it at a lower price. Let's say now I'm offering it at $15,000, and I offer to sell it to more people, making it look like this is the going price for a 2019 Ford Taurus. This, in turn, forces real sellers of the car to adjust their prices to my fake price because they need to remain competitive in a market with a lot of supply. With these real sellers now offering their real Ford Tauruses for $15,000, I go out and buy one. At the same time, deleting all of my fake $15,000 ads. And then I sell it to the person who already agreed to pay $18,000, and I pocket the difference. This, in a very simplified way of speaking, is how manipulation of the silver price works. And this method has a name. It's called spoofing. And it goes on, just as I said, in the silver market, with commodities traders creating fake buy or sell orders in large amounts to create the illusion that the price is going up or going down, thus getting investors to act in a way that is beneficial to them because they know what's happening. And I've covered this in the past, but the most famous accused spoofer is an institution that categorically denies participating in it, and that is JP Chase. And they settled a 2020 precious metals market spoofing case against them for $920 million without having to admit any guilt at all in what I like to call an F-off payment. And what they were accused of doing was creating fake offers to sell silver in the paper market, which created the illusion of a decrease in demand, thus reducing the price of silver, as you can see in this simple supply and demand chart. So, to my viewers, you can clearly see that the manipulation of metals prices is not a fairy tale. It is real and it is possible. And to any viewers from JP Morgan, especially lawyers, I am not accusing you of anything. I am simply using this example to illustrate that the possibility of this is documented. I understand you have paid $920 million to settle your case with the US government, and I wish you and your depositors all the best in remaining solvent, considering the $40 billion in unrealized bond losses that are coming to light that the bank is holding since your CEO, Jamie Dimon, unloaded $141 million worth of stocks a little more than a week ago. But back to the main topic, and that is little manipulations like the ones I've described in my example are happening on a regular basis, very often perpetrated by traders at large investment institutions looking to make an easy buck. But with the size of the derivatives market being much larger than I think anyone ever intended it to be, I sincerely believe that it has created a parallel market that makes proper price discovery for silver almost impossible at this time and very difficult to realize. And before I reveal my calculations for what the unmanipulated price of silver may be, I want to say that I am not a believer that the US Federal Reserve has a button created by Alan Greenspan that sets the price of gold and silver, as my critic Road to Ruta believes. And if you are watching Mr. Weir, you are welcome to come here on the channel to discuss this with me anytime you want. All I ask is that we stick to the facts and remain respectful to one another. Using a dismissive or arrogant tone, calling someone naive or uninformed, has nothing to do with the facts that I always go out of my way to present. And as someone who was educated in Austrian economics and built a career developing business strategies, I would appreciate a little humility and openness from your side, and you will get the exact same back from me, because I believe our worldviews align a lot better than what may be noticeable from just one video. But now, to reveal where I think we could be conservatively with silver if we addressed and even eliminated the derivatives market, I took a look at the current trading corridor going back to 2020 and made the assumption that those people with their fingers on the button have the ability to get the price of silver to the top of the corridor, as well as push it all the way down to the bottom of the corridor. And that means they are able to push the price of silver down by 38% by manipulating the derivatives market, either advertently or inadvertently, because again, I am of the opinion that all control over that parallel market has been lost. Or maybe not all control over it, but at least a large amount of control over it. Now, if I assume the price can be manipulated down by 38% in this corridor, I will also make the assumption that the price could be manipulated down to the high price in the corridor, so down 38% to $29 by the same percentage from the real market price. And if we adjust the price, the $29 price, and say, all right, what would the real price be if we adjusted it down 38% to reach that $29? That gives us a potential price of silver at $46.72 an ounce, which is up 61% from that $29 and almost 100% from where we're at today. Now, if we look at the extreme in this world of silver and assume large market players have shorts of 3.3 billion troy ounces open as I am making this video, a number that is 3 times the world's annual supply, and that all of these shorts are naked shorts, meaning they don't have the actual silver, and they plan on settling these shorts with US dollars, thus artificially keeping the price of silver down, then we could be looking at a scenario where the price of silver conservatively should be 4 times higher than the current spot price suggests. Meaning, if we revert back to our longer term trading corridor, the price of silver could be as high as $72 to $116 per troy ounce. Now, this is not a scenario I'm necessarily aligned with. It's not one that I necessarily agree with. And the main reason is because I think as we approach $100 an ounce, many sellers will enter the market. But if we compare all of these scenarios to each other, you can see that in the greater scheme of things, even versus my 2026 price prediction of $60 per troy ounce, they are not far off from each other. And with silver currently at $23 per troy ounce, and that's the spot price, and dealer premiums, dealers like Pimbex still having relatively low premiums above spot versus what we saw a couple years ago, I sincerely think now is one of the best times to buy silver that I've seen in my 15 years of stacking gold and silver. But I want to make this point, and it's important, so don't turn off the video quite yet, because the reason I stack silver, the real reason why, if we're looking at whether I do it to be rich or to be ready, is I stack silver to be ready. And I don't encourage people to stack silver with the ultimate goal of being rich. Because what I'm being ready for is I'm ready for real increasing demand and the benefits it will, of course, bring along with the price. But I'm also preparing myself to be ready for more market turbulence that we are entering right now. And again, it's why I say I've never seen a better time to buy silver in my last 15 years of stacking. I really think now is the best time. Now, if you want more content where I'm talking about topics like that, like this one, I just posted a video on my Patreon talking about inflation, the bond market, and how I expect silver to be pulled up soon by gold. Link to join is in the description and pinned comment. You can cancel at any time, and you get a 16% discount when you subscribe for a whole year. I think it's a pretty good deal. I post a new video every week, as well as a newsletter to prepare you for the week ahead, help you time the market better, and also on the Patreon, I give you the tools you need to make better stacking decisions. So please check it out and join if you're interested and you want to support this channel a little bit more. With that said, that is all for this video. I am wishing you all a fantastic day ahead. Remember to please take care of yourselves, but more importantly, let's take care of each other. That is a very important pillar upon which the Bald Guy channel is built upon. Again, I'm wishing you a fantastic day ahead, and until the next time we see each other, goodbye.